policy regime and the resilience of the Indian economy. These are the two selling points Finance Minister Arun Jaitley has driven home to sovereign wealth funds from Singapore and the UAE. The aim: attract foreign capital to sectors like roads, railways and energy. The government's focus has clearly been on its pet project, the 40,000 crore National Infrastructure Investment Fund, popularly known as the NIIF. This will be used initially to bail out stressed projects in the infrastructure space before panning out to other areas like renewable energy and high-tech manufacturing. The government has decided to cap its own investment at 49% of the total corpus and is looking to tap into the resources of several sovereign funds and some domestic financial giants like SBI as well.
So there are three that I think are already in the pipeline and are moving along quite well. One, of course, is the MOU we signed yesterday with our friends in Russia, and that is looking at high-tech manufacturing and what we can do to further support Make in India. The second fund that we have spent quite a bit of time thinking about already is the Stressed Assets Fund. There's been a lot of discussion about NPAs and what we're doing about it. But one of the very important elements of dealing with the NPA situation is to have a source of long-term, stable equity risk capital that can get into some of these stalled projects and be able to provide the equity support that they need. So that's a second fund that we're looking at. A third fund that we're looking at is in the renewables area. Obviously, we have very ambitious targets that we have established for renewables for India's energy needs.
I don't think that the government of India has a model which clarifies which gives kind of what kind of a rate of return the investors have to expect and they will get.
Productivity gains in India from infrastructure investments is massive. So at a system level, there's bound to be a huge amount of payoff from infrastructure investments. I think the challenge is, frankly, and I think a lot of fund managers, investors, etc. need to figure out whether isolated assets within that systemic infrastructure development will capture value which will return the cost of capital or the cost of equity for that.
I think it's a fantastic initiative to invest and get started with rail and roads. So in that respect, I think the only thing I would say that's very important is the governance structure and the investment criteria between the private sector and the government. It would be very important for people private investors to come and invest or co-invest in the fund.
And from infra to IIT, the industry is expected to grow at 10 to 12% in FY17. That's the word from industry body NASSCOM. The growth is still in double digits. This forecast is much lower than the growth that IT industry has been clocking in the past few years. NASSCOM adds that domestic revenue